This is Danny Gould with the Gould team selling Silicon Valley. People have been asking me lately, how's the market? The short answer is it's complicated. The long answer is right here with your Silicon Valley market snapshot for the third week here in July of 2019. Wow, we're already halfway through the year, folks, and it seems like I've been getting that question more and more because people are reading the headlines, they're seeing what's on the news, they're paying attention to what's going on down the street from them, and quite frankly, there's quite a bit to talk about. I have some new data that I've never really shared with any of you before. And as we look at this data and we extrapolate information, we can actually see that the market has already begun to drop when we look at the market overall. And what I would caution you with is don't pay attention to this first minute of the video and run away with it and say that the market's dropping and everything's gonna go to hell. That's not true. But the reality is that yes, the market has dropped. And if we look at the average data, the numbers on average, we are seeing things start to dip just a little bit. And so what I would say is pay attention closely, and don't get carried away with any one singular week of information. Right? This is a snippet in time. This is a very limited scope compared to the grand scheme of things, but I do want to share all of this information with you. So let's dive right into it, everyone. Let's just dive right into it. We're going to start off with the acceleration maps, if you will, just looking at the active and pendings across the townhome condo sector and the single family sector here in Santa Clara County. If you notice, active listings here, 1542. Right now, compared to last year, we're at 1219. So we're definitely over, right? We're definitely over where we were last year. Now, in terms of pending sales, we are up again from where we were this time last year. So the additional inventory, some of it, a very small amount, I would say a marginal amount, if you will, is being absorbed by the buyers, and that's a good sign, right? Because if inventory was going up week over week over week over week, and pendings are going down and down and down and down and down, that is a recipe for disaster. But at this point, it does seem like some of the additional inventory is being absorbed, which means that the appetite is still there, right? But when we look at the condo and the townhome sector, that's where we start to get a little concerned, if you will, because we are significantly over where we've been over the last 3 years in the condo and townhome sector. Now, if you've been watching these videos for any given period of time, you will know that this has been the case for some period of time. This is not front page news, but it is good to note that we are seeing these trends continue week over week, and it doesn't seem to be going down, if you will, right? So that's the message here, is that this has been the story since the beginning of the year, and it doesn't seem to be it doesn't seem to be any different than it was at the beginning of the year. So if it was the story at the beginning and it's the story at the middle, then we can make some assumptions as to what the end is going to look like, wouldn't you say? So will the inventory rise dramatically in the condo townhome sector before the end of the year? Doubtful. But will it drop dramatically? Doubtful as well. So with that in mind, sellers should know what to expect, especially if they're planning to sell their condo and townhome going into the next 6 months. Expect the same amount of competition. Expect a consistent amount of competition in that sector. Let's move on. So this is what I really wanted to spend the majority of our time on. And all of the graphs and all of the charts and everything that you see on a weekly basis from me, this is the data chart that we're getting it from, right? So instead of just looking at fancy lines and everything and trying to extrapolate information, let's just look at the numbers, because I think sometimes numbers give a lot more perspective as opposed to just looking at lines, right? So look at the number of for sale. This is single family homes in Santa Clara County 1,130 as opposed to 1,549. That's what we saw in the charts earlier, right? Now, let's look at average sold price. Average sold price, $1,701,000 as opposed to the average sold price today, $1,656,000. So, if you see 1739, 1716, 1701, 1627, boom, boom, and then up, down, down. Now, you have to understand, some of this is seasonal. So looking month over month doesn't really do much, right? But when you look year over year, you do start to, pick up on some trends. Let's look at the median sold price. $1,399 versus $1,350. So $1,399,004 versus $1,350,000. Why is this, right? Well, a couple things to keep in mind. And we've talked about this on previous videos. If you've watched these for any period of time, you'll know that median sold price is impacted not only by, number of homes sold, but also where those homes are sold in terms of price point. Right? Because what we're seeing right now is the higher end, the top quartile of the market being squeezed, right? And with that squeeze comes an inherent effect on the median sold price, right? Because when less homes in the higher end are sold, then that brings down the overall median. Classic statistics, right? But at the same time, when we look at the average sold price and the median, and the median sold price, when the mean, average, and median are both trending down, and we see these numbers of inventory going up, right? That is all a recipe, right? That those are all telltale signs that the next 6 to 12 months could get progressively worse, if you will. Now, what's worse? Let's put this into perspective, because what I don't want anyone watching this video to assume is that we're going to experience a crash, right? What we are experiencing, or what we've already experienced rather, over the last 9 months here in Silicon Valley is a market correction, right? The market has corrected itself. There are many micro pockets. There are many areas in which the average sales price year over year has gone down. And if you look at many homes that are selling right now, and you look at their predecessors a year ago, same square footage, same floor plan, worse upgrades, like overall worse home, just same floor plan, last year still sold higher than this year. So what does that mean though, right? And again, if you've been watching these videos for any given period of time, this might seem like a little redundant. But that being said, for those of you that haven't been watching these videos for any given period of time, what we can, deduce from that data is nothing more than the inventory levels were so suppressed last year that as we get closer and closer to historical normal levels of inventory, we will continue to see this correcting effect. And by the way, what is historical norm? Because I don't think a lot of us remember. It's been almost 2 decades since we've been at historical normalcy, if you will, right? It's been almost 2 decades since inventory levels have been anywhere near where they have been historically for the past 30 years before that, which is 5,000 to 6,000 homes. Units, if you will, condos, townhomes, and single-family homes. My buddy Keith Volling over here is trying to interrupt my market update, but pay no attention. The bottom line is this, though, everyone, is that we are in the midst of a correction, and the issue with that is that there is no normalcy to corrections. They go up, they go down, things kind of like teeter, if you will. And so if you're asking for answers, if you're asking for absolutes or definites during this time, whoever tells you that they have the answer for you, or that they have they know exactly what's going to happen to your home, they're wrong. Now, we can use data, we can use statistics, we can use trends to establish some type of expectation. But if there's anything that I've learned over the last 6 months, is to expect the unexpected. Hope that clears something up for you guys. It probably is going to add a little bit more confusion than a lot of my other videos, but that's the reality, is that I think over the next 6, 12, 18, maybe even 24 months, we can absolutely expect the unexpected. So that's it, everyone. If you have any comments, questions, leave them down below. You can call me, text me, email me. As always, this is Danny Gould with the Gould team, selling Silicon Valley, and I'll catch you all in the next video.